Peter Eliades with you. This is Stock Market Cycles update for the week ending Friday, January 3rd. Beginning of a new year, folks, and oftentimes you see important turns occur around the beginning of the new year. We'll talk about that in just a minute as to whether we think an important turn is occurring right here and now. We show you this chart because we had a nice down day today. This is the New York Composite Index. We showed you this chart yesterday because the New York Composite Index had entered smartly into the projection window of what we call a nominal 78-week projection. This is on the daily chart, but it shows the weekly projection. The offsets that are used for this are 189 to 194 trading days. So you can see them delineated here. The red one is the 189, and the dotted one, if you can barely make it out, is the 194. So as we told you yesterday, we had an initial move above them to give a significantly higher projection here. This was earlier in the year, back in March or April. But then we came back down smartly below all the offsets, and that invalidated the projection. At that point, you used this low for any moving back above the offset lines, and that's what occurred. In late June, early July, we had a move above the offset lines once again, both of the offset lines, a nominal 78-week closing price projection to between 13,941.93 and 14,129.96. The high close so far has been 14,002.49, right in the heart of that projection window, and now we've started to break down. We have a trend line in here, and we think that trend line is relatively important. If you reach a longer-term projection like this and then break the trend line leading up to that rally, that might be a negative signal given, so that's something we're going to watch. But we emphasize again that a one down day in a bull market that's been this long is not enough to proclaim a great bear market has begun. The most important point that I continue to make, I've said this several times in the past 3 or 4 months, this market is so historically overvalued that we must consider every potential short-term top as a possible very major top. So anytime something like this happens, we are on the lookout. So far, as my old friend Stan Weinstein used to say, the preponderance of the evidence argues for higher prices. We say this because the daily advanced decline line has confirmed the new all-time highs that were registered this past week. We saw no important divergences at those all-time highs, and generally speaking, when you don't see any important divergences at all-time highs, that's bullish. You could have a decline from there, but probably you have not reached the final high. That much having been said, let's show you once again what we consider to be a potentially important channel, and that is this one here. I noticed yesterday that we didn't quite get to see the lower part of this channel, so I'm going to move that up a little bit. Now, we can pull these together a little more, so this will be a lot more clear in terms of the channel. So here was the low in early June of this past year, 2019. We came down and virtually hit right on the line on August 16th and came down to it again with a little spike to the downside on October 3rd. So that line has been the slope to the upside. Once this high was established, which happened in mid-July, and you started coming down, then you had yourselves the making of a nice parallel channel. 3 hits on the bottom, you put a parallel channel on the intervening high and say, perhaps that's where we're going. Well, guess what? As we pointed out yesterday, we came virtually exactly up to that. We'll zoom in on this so you can see it. I mean, very seldom do you get this close to hitting them. But look how close that was. I mean, that's virtually an exact hit that we saw at the close on January 2nd, the first day of the new year. Okay? So that's something that bears watching. The evidence, as I said, the preponderance of the evidence is because those new highs were accompanied by new highs in the daily advanced decline line, that's not going to be a final high. But every short-term high from this point on will be considered a potential long-term high. So what do we do now? Well, we wait for the beginnings of downside projections. We're not going to get any market top of significance without generating downside projections, and we don't have that yet. I won't even show you the daily charts because there's nothing to show. There are no downside projections as yet. So there is something developing internally in the market that I'm not going to talk about now because I don't want to jinx it. But there is something potentially very important going on. That's all I'm going to say right now. You have yourselves a great weekend. We'll talk to you again on Monday.